are continuing to put pressure when it comes to trade. All right, Mr. Mehta, President and Director of JK Paper, joining us today. Mr. Mehta, your revenue is up 7%, but if we see, if we look at the numbers quarterly, there is a decline. Would you attribute this to the annual shut at the unit, in JKPM during the quarter? Did that impact your numbers?
That's the only reason, and in fact, we anticipated the lower number, but we did better than what we thought, despite the annual shut for 9 days at our Odisha facility.
Sure. So with the highest ever PAT and margins last quarter, you haven't got the same level this time around, though. What are your margin expectations for FY20?
See, in fact, I would say that there is no contraction in the margin. In fact, the margin for the quarter is improved. I would say on a revenue basis, when you see on the net output value for this quarter, in fact, our margin has improved. And year as a whole, when you see that the companies, whether it is EBITDA or cash profit or a net profit, it has shown the radical improvement. And going forward, I would say the year ahead, see, the company is going to have the further improvement in efficiencies. So that's one part. The top line should grow because we will have some improvement or after the debottlenecking of some of the equipment in some of areas. So the production should be higher than what we had seen this year. So the top line should grow. The only issue, I would say that, how the global paper market behaves. That's one critical factor. Last year, 18-19 was a very good year as far as we are concerned, because we are integrated paper manufacturer. And for any integrated paper manufacturer, the global pulp prices, if they move upward, so that gives the advantage. So how do the international market of the pulp and paper behave? That will define the result for the company in the year 1920. Rest on our own efficiency parameter, our own cost reduction initiative, our plantation activity, all these things will certainly give the advantage, compared to even the current year.
Okay. So how is it that you're seeing improvement in pulp prices?
See, I would say that when the global pulp prices are higher, that means the global paper prices will also remain in tandem with the pulp prices. So when the global paper prices are higher, so then the domestic prices also, can move in tandem with the global paper prices without having the higher cost of the pulp, because we are integrated players. So that's the equation. It makes a difference for an integrated player. Going forward, the pulp prices, which were at higher level of $800 a ton, come down. Right now it is somewhere around $700 a ton. And what we understand that in a short term, the pulp prices may again move up, but may not go beyond $750. This is what our understanding of the global paper and pulp market is. Even if it remains at $750 a ton, that still gives us the significant advantage to us, because there will be a higher paper prices globally, and we will be able to withstand the prices, or to some extent we could correct the paper prices for the coated paper and the packaging board.
Okay. Are you looking at any price hikes in the coming quarters then?
See, I would say that as far as the writing and printing paper is concerned, the uncoated paper I don't foresee in the near future. After September, October, we will see how the market remains and what's the demand and supply scenario, and also the global paper prices. But certainly on the coated paper, there would be some price increase in time to come.
Sure. All right, give us a sense as to how much exports contribute to revenues as well, and the kind of growth we saw on the export front, as well as some of your expansion plans for international markets going ahead.
We have been exporting something around 7 of our total volume, and to my mind, going forward, since the domestic market is showing a robust demand, so I may not have the increase in the export in year to come. Also, our export obligation under the EPCG scheme is more or less over now, so we don't have to mandatorily think about exporting paper to the overseas countries. Some market where we get a better realization will continue. Some of the market where there is a tough competition from the other player and where the NSR is not better or is not comparable, so in fact I may withdraw from those markets.
You know, last time we spoke, you also mentioned about the Sirpur mill starting full production by about April. Is it on track, and if so, by when will you also start to expect to see the benefits?
Okay, as you rightly pointed out, we already started the trial production from the 2 of the machines, and in fact we have also started our pulp mill there, but it will take some more time to stabilize the pulping. Paper machines, 2 machines we have already stabilized, and once we get a stable right quality of pulp, that the paper will be out, the sellable paper will be out from the Sirpur. See, going forward, I would say that the second half of this fiscal year, by and large, we will be having 4 machines up and running, and thereafter the ramp up will start, and close of the year, before the close of the year, I think we should be able to achieve the 100% capacity of Sirpur.
Okay. With the anti-dumping duty now being in place and the rupee strengthening as well, how has it impacted your financials?
See, since there is an anti-dumping duty on the copier paper, that's the only category where there is an anti-dumping duty, and there is a benchmark pricing under which, I mean, below that, the people cannot import the paper. If they do, there will be anti-dumping duty. So $855 is the benchmark price, and right now the import is happening at around $860, $870 only. So below that it is not coming, because they don't want to come under the ambit of the anti-dumping. Otherwise they will have to, comply with so many other submissions and the formalities. So that's one part. But yes, the strengthening rupee will certainly have an impact. But since the demand and supply scenario for copier paper in the market is fairly balanced, so we have not yet dropped the prices of the copier paper. We are okay as far as present pricing and the demand supply scenario is concerned. We are fine.
Okay. So what are your capex plans for FY20? Are you looking at any organic or inorganic growth?
See, as we have announced earlier that now the major expansion or the major capex is going to happen in Gujarat, where we will be putting up a board machine as well as the pulp mill. So, and that investment is a sizable investment. We will be doing it. So more or less in the year now 1920, there will be some investment, sizable investment, and the major investment will happen in 2021.
Okay, great to have you on the show. Thanks so much for highlighting what your quarterly performance has been like. Quick status check on what the market is up to. Still lower by about 0.5%. It is Reliance Industries all the way, getting clobbered for a 4th consecutive